Welcome to this explainer. Today, we're going to uncover the massive, hidden financial engine operating quietly behind the golden arches. You know, when most of us look at McDonald's, we just see this absolute fast food juggernaut, right? But today, we're actually going to look way beneath the surface of that menu to explore what is honestly one of the most brilliant corporate architectures in American business history.
So let's dive right in by asking a totally counterintuitive question, one that's going to challenge basically everything you thought you knew about the world's most famous fast food chain. Ready? How does a simple, inexpensive burger build an estimated $40 to $120 billion real estate empire? Well, to find the answer, we'd literally have to look past the fryers and look straight at the balance sheet.
Section 1. Not a burger company. The hidden empire. Let's begin by completely shattering this hamburger illusion and looking at the modern financial reality of where McDonald's core wealth is actually generated. Because, spoiler alert, it's not in the kitchen.
Just take a second to wrap your head around the sheer scale of the rent McDonald's collected from its franchisees in 2024 alone. $10 billion. That figure completely blows past the $5.6 billion the company collected in actual royalties from selling things like Big Macs and fries. Think about that. They are making almost double the money just from leasing the ground those restaurants sit on.
And as you can see, the franchise and rent side of things completely dominates the money made from directly selling food. Out of $25.9 billion in total revenue for 2024, a massive $15.7 billion came from franchise locations. That's essentially rent, royalties, and initial fees. Meanwhile, only $9.8 billion came from company-operated restaurants.
Okay, so here is the crucial takeaway, and it is a stark mathematical reality. The business of directly selling burgers yields a modest 15% margin. I mean, it's super labor-intensive, right? You've got food costs, inventory, waste. It's a total grind. But the business of acting as a landlord and licensor, that commands an absolutely incredible 84% margin. Turns out it costs way more money to run a busy restaurant than it does to just sit back and collect rent checks.
Which brings us to Section 2, Ray Kroc's broken math and the 1.4% problem. To understand how they pulled off these insane margins, we have to flash back to the 1950s, when founder Ray Kroc was actually teetering on the verge of financial ruin.
See, despite scaling this absolutely perfect operational system created by the original McDonald brothers, the famous speedy service system, Kroc had a major problem. His original verbal agreement only gave him a tiny 1.4% royalty on franchise store sales. He was completely cash-starved. And to make matters worse, banks flat out refused to lend him capital against unpredictable, highly variable burger sales. The operational system was basically flawless, but the financial equation, it was bankrupting him.
This intense financial pressure forced a really rapid evolution. In 1955, Kroc is struggling big time. But then, in 1956, a financial wizard named Harry Sunbarton joins the company and completely pivots the model. We'll get into the details of that in a second, but this pivot brought in a massive influx of new capital. It allowed Kroc, by 1961, to borrow $2.7 million to buy out the original McDonald brothers entirely. This historic, and let's be honest, somewhat ruthless buyout left the brothers with absolutely no stake in the massive real estate empire that was secretly being built right beneath their brand.
And that leads us right into Section 3, the Sonneborn solution, a real estate pivot. Because the true architect of this empire wasn't a chef at all. It was a former Tasty Freeze financial executive named Harry J. Sonneborn.
This is the guy who looked at a burger chain and literally saw a real estate conglomerate. He actually pitched investors with this massive paradigm shift. He told them, quote, "We are not technically in the food business, we are in the real estate business. The only reason we sell hamburgers is because they are the greatest producer of revenue from which our tenants can pay us rent," unquote. The food was just a mechanism to make the franchisees viable enough to pay their lease. Crazy, right?
Sonneborn's pure genius was inserting the corporation right between the franchisee and the land itself. Here's how it works under his model. McDonald's goes out and secures a prime commercial plot. Then the franchisee puts up the capital to build out the restaurant and takes on all those day-to-day operational risks like staffing, food prep, all of it. Meanwhile, McDonald's corporate sits safely above the fray, collecting a steady rent check, which is usually a base rate plus a percentage of sales alongside their standard brand royalties.
To actually pull this off, he established the Franchise Realty Corporation in 1956. By doing this, Sonneborn suddenly gave the banks exactly what they were looking for: secure, hard collateral. Lenders wouldn't finance burger royalties, no way, but they would absolutely finance prime commercial real estate, and that was the key that unlocked the massive nationwide expansion of the Golden Arches.
All right, moving on to Section 4, the hidden engine, compounding wealth. Let's jump back to today and break down exactly how this historic 1956 pivot still functions right now as an unstoppable, compounding engine of wealth. If you take a deep dive into their recent balance sheets, it absolutely proves that tens of billions of dollars are locked up, not in deep fryers and kitchen equipment, but in prime, appreciating real estate. According to their reports, property and equipment make up the vast majority of their total assets. We are talking about nearly $40 billion recorded at depreciated book value, which means the actual market value of these properties today is likely exponentially higher.
Now here's why this is so brilliant. It structurally hedges against inflation. See, McDonald's finances their properties using long-term fixed-rate debt, so their property costs stay totally flat, but franchisees pay rent as a percentage of their total sales. So as inflation inevitably drives menu prices up over the decades, McDonald's rental income automatically inflates right alongside it, without them doing a single thing. And to top it all off, the franchise agreement usually says the franchisee covers the property taxes, the insurance, and the maintenance. Honestly, it is a landlord's ultimate dream.
And the raw operating profit proves the sheer dominance of this landlord model over the traditional restaurant model. In 2024, the franchise side, the rent and royalty side, brought in a staggering $13.2 billion in operating profit. The company-operated stores, just $1.45 billion, meaning this real estate engine is generating about 90% of their total operating profit.
Section 5. The real estate moat, an unbeatable defense. This unique hybrid structure doesn't just make them money, it acts as an almost unbeatable business moat in the modern economy, protecting them from massive market fluctuations.
Get this, McDonald's actually owns the physical buildings for roughly 70% of their locations globally, and the underlying land for about 45%. That gives them total leverage over their operators. With over 43,000 restaurants worldwide, we're talking about roughly 19,500 owned land parcels and over 30,000 owned buildings. This level of physical ownership provides just incredible downside protection.
This physical ownership creates the ultimate corporate defense system. They have these recession-proof minimum base rents built right into their contracts, and they own some of the absolute best, highest traffic commercial corner lots on earth. If a franchisee fails, no problem. McDonald's simply evicts them, keeps the appreciating property, and slots a brand new operator into the space. Activist investors have constantly pressured McDonald's to spin this real estate off into a separate real estate investment trust, or REIT, to unlock a bunch of instant cash. But McDonald's repeatedly refuses. The synergy of controlling the land, controlling the brand, and keeping the franchisees disciplined, well, that's their ultimate shield.
So as we wrap up this explainer, I want to leave you with this final provocative thought. The McDonald brothers thought they were selling a burger chain, entirely unaware that Harry Sonneborn had built a massive real estate empire right underneath them. So the next time you look beneath the surface of any operation, try to find that hidden asset. Because whether you're looking at a lease, an investment, or a brand new business venture, you really have to ask yourself, are you the burger company or are you the real estate company? Because more often than not, the deal you don't see is the one generating all the wealth.